So SCHD, the ETF that we love so much in this dividend community, I own it. It is splitting this week, 3-for-1. Charles Schwab is also going to do this with other ETFs in their lineup. I want to share in the video today how I view this split. It's really exciting, but I also think there's some misinformation out there in the community about the split. So check it out on the screen in front of you right now. You can see on the SCHD website from Charles Schwab, you can see there at the bottom, hey, effective after markets close on October 10th, it's going to do the 3-for-1 split. And so first and foremost, logistically, what is happening with the split? Check it out on the screen. You can see here the chain of events. And so right now I'm filming the video. It's Tuesday, October the 8th. Tomorrow, on Wednesday, the 9th of October, it's the date of record. What this means is by the end of tomorrow, investors who buy or own SCHD already, those investors are eligible for the split. On the 10th, on Thursday, after market close, payable after close, the investors will basically receive the new shares, the split, the 3-for-1 split. Now, personally speaking, I highlight Thursday. I'm not sure how it's going to trade on Thursday in terms of will it be kind of at the old price, at the new price? Where will it be? I don't know. But it trades. They say on the website that it will start trading at the post-split price on Friday the 11th. And so right now it's trading about 84.30. If I divide that by 3, that becomes 28.10. So I'll have 3 times as many shares on Friday as I did on Wednesday. And each share will be worth 1/3 as much. There's no value creation. I just get more shares at a lower price. So again, you can see the chain of events here, and where I highlighted on Thursday, that's kind of the mystery to me. I leave a question mark there because again, the date of record is Wednesday. It's going to trade post-split price on Friday. What does that mean for investors that buy on Thursday? Put in the comments below if you know or if you have a guesstimate of what's going to happen that day. I'm not going to be buying anything on Thursday because it's kind of ambiguous what's happening. I think for me, as it kind of turns out this week, if I were to buy SCHD, I'll probably do it tomorrow, Wednesday the 9th, because it will be the date of record. And then I'll see on Friday all of my new shares. So that's logistically what's going to happen with SCHD. I want to underscore here because there's a lot of misinformation out there in the community. There's no value creation. Sometimes with an individual stock, when they announce a split and they kind of trade into that split, there can be a little bit of value creation, and that just so happens because the split signifies confidence to the investors. The board of directors has confidence in the company, so the trading volume goes up. There's a lot of buy orders. People are excited about it. There can actually be a little bit of value, equity value creation that way through a split when an individual stock splits. In this case, we're talking about an ETF. The ETF has many underlying holdings. None of them are too big. And in my opinion, yes, it signifies that Schwab is confident in this ETF to split it, but also I don't really see volume getting high enough where it could actually move the market underneath it. I don't think they could move the share prices of the underlying equities underneath this thing up. I don't really see this as value creation, if you will. And so I want to share that on the screen in front of you right now. I did an analysis, and this talks about this concept kind of value creation. Can there be value creation here? And mathematically, I don't really think so, because look, it's trading at 84.30. The market cap is $61 billion, which is really small, because you can just look at the top 10 holdings below, and all of them have market caps that far surpass SCHD. And none of these holdings is any bigger than 4.38%. That's the biggest, the Home Depot, which is a stock I own individually as well. But anyway, you can see the average volume is 4.19 million units per day. And the dollar volume of that is about $353 million are traded per day of SCHD. Let's just assume, hypothetically, because of this split, let's just assume investors are going to go wild. They're so excited about it. Let's say volume on this ETF goes up 10 times, 10x. What would that look like? Well, as you can see on the screen in front of you right now, if volume went up 10 times, they would be trading about $3.5 billion worth of units per day. Let's just say, hypothetically, these were kind of buy orders, or it was all this volume was largely kind of focused on people actually buying the ETF. Well, what I look at down below with the top 10 holdings, you've got Home Depot, Bristol Myers Squibb, BlackRock, Verizon, Cisco, Chevron, Lockheed Martin, Pfizer, TI, and AbbVie. Look at these things. Let's just look at it. What would it mean for these underlying top 10 positions? I'm not even looking at the rest. I'm just looking at the biggest ones. Well, Home Depot, for example, it's 4.38% of this whole thing. What it could mean is SCHD would buy, say, hypothetically, $154 million worth of Home Depot stock in a day or in a series of days. Well, Home Depot's market cap is $405 billion. So even if this 10x scenario happened, it would only be about 0.038% of Home Depot's market cap coming in as kind of net new buy orders from this surge in volume with SCHD. You can see with Bristol Myers Squibb, 4.23% of SCHD right now of the pie. Okay, well, even at 10x volume, and let's assume again the volume is mostly buy orders. Okay, someone buys SCHD. They have to go in turn buy some more BMY. Say they have to buy 10 times more than they usually buy on any given day. And remember, volume on any given day, it's not just buy orders, it's sell orders too. But let's say it triggers a mass amount of buying. Well, the market cap of BMY is $108 billion. 149 million as a percentage of 108 billion is only 0.138%. And so even at the bottom of this, when I just look at the sum, you can see it's 0.067%. 0.067% on 10x volume, that's just the percentage of market cap of the top 10 holdings. And so why did I do this analysis? There's a lot of numbers that I just shared. It might be a little confusing. It sounded a little confusing when I was explaining it. And so I want to just summarize what I just shared. What I shared is that even at 10x times normal volume for SCHD, the amount of volume coming in, I don't think it's going to move the market. I just don't. I don't see it moving the market of the underlying securities. And what I'm trying to say is, yes, it's exciting that there's a 3-for-1 split, but there's no value creation. There's no net new value here for investors like myself. I'm not going to see SCHD share price magically go up because a split was announced. Even if they see 10x volume because of this split that is largely focused on buy orders, it's just not going to move the underlying stocks that SCHD owns. If it were a single company event, again, sometimes it can trigger a little bit of short-term equity value creation. So there's this myth in the community that this split is some magical thing. It's free money. There's more money coming through. It's value creation. No, it is not. But why am I excited about this thing? I'm going to get to that right now. Check it out on the screen in front of you right now. And so I just want to share my thoughts about this stock split. Well, first and foremost, as I said, there's no value creation. The way it works is I owned a share. Now I own 3 shares. But each of the 3 shares is worth 1/3 of what it was before. And so 3 times 1/3 of what it was worth before equals 1. It equals what it was worth before. But I'm excited. Why am I excited? This is really good for smaller investors who like to dollar cost average. This is just good for people watching this video, for everyday people, for people trying to build a position in SCHD brick by brick by brick. Here's an example. Let's say I want to deploy $200. I have $200 to deploy. Well, at $84.30 a share, I can buy 2 whole shares for $168.60. But because I have 200, that means I have 3130 left over for next time. I'm assuming here I don't have the ability to buy fractional shares. Now, I do want to point out that some brokers now allow that, but let's just assume here that a lot of us watching the video today don't have access to that. No, there's no access to these fractional shares. And so at $84.30 a share, hey, it's a little frustrating because for my $200 I can hypothetically deploy here, I can only buy 2 shares. And I have a lot of money left over that now I need to keep saving for next time to buy again. By contrast, at $28.10 a share, I can buy 7 whole shares. And 7 times $28.10 equals $196.70. Now, I can deploy most of my $200. I only have $330 left for next time. So what's really exciting about this, when stocks split, when ETFs split, it's good for the type of people, generally speaking, that watch these videos. And for myself, I like to buy in smaller tranches, bit by bit by bit, brick by brick by brick. I'm just averaging in over time. When I have smaller amounts of money to deploy and share prices are really high, sometimes there's just money left over. The investor can only buy so many shares at any given time. But when share prices are lower, generally it's just mathematics. It's easier to deploy all of the money, to deploy the money that the investor set aside, because there's usually less of a remainder. There's less of remaining cash left over. It just makes the division easier. It makes the process easier. So for those who are buying brick by brick, small tranches incrementally over time, this is really just great, I think, for those stacking SCHD. But what else do I think about this? As you can see on the screen in front of you right now, the next thing is there's a lot of hype around this split, but as I said, even at 10x normal volume, I don't see the split moving the ETF up, because the volume that would translate to the individual underlying securities, it's just not enough volume to move those securities, in my opinion. Now, what I do want to hype up quite a bit with SCHD is the CAGR, compound annual growth rate. On average, they're increasing the dividend by 12% per year. So everyone right now, they're focused on this split. They're excited about it. Don't get me wrong. I'm excited about it too, for the reason I just shared. It's going to make brick by brick investors be able to get their money out there into SCHD easier, more effectively, more efficiently. It's going to be more motivating. It's going to be great. But here's why I'm really excited. As you can see on the screen right now in front of you, check out some stats. SCHD at 84.30 pre-split is only 1% off the 52-week high. It's been doing all right. But let's add up the last 4 distributions. You can see there. Let's look at the 5-year prior comparable period. You can see that on the right-hand side of the screen. Last 4 have been 2.9319. The comparable 5-year prior period, the 4 during that period, was 1.6638. The CAGR on that, if I use my CAGR formula, I am getting a staggering 12%. I am getting a staggering 12%. And the starting yield is 3.48%, which isn't bad to start. So why I am so excited about SCHD, and someone was asking me, Ian, why don't you just recreate this in your portfolio yourself? Well, I don't really trade stocks. SCHD does something for me that I just don't do. And it reconstitutes the fund from time to time. It rejiggers the holdings, if you will. It moves them around based on its algorithm. And this is an algorithm that doesn't really require too much human oversight. It's tracking an index, if you will. It's the Dow Jones 100 Dividend Index. And this is an index that changes over time. And it just so happens that this index, boy, it has a great combination of starting yield and growth. And I use this ETF to bring dividend growth to my portfolio, which doesn't offer as much dividend growth portfolio-wide as this fund. That's why I like it so much. And so anyway, put in the comments below, what do you think about this split? Are you excited? Are there other things I missed here that make you excited about the split? Are you buying SCHD right now? Put in the comments below. I always love reading and responding to your comments. Also, if you enjoyed the video, don't forget to give me a thumbs up. It means the world. It really helps my channel out. Also, don't forget to subscribe. And one note, actually, Corner patrons, I have a virtual Zoom meetup on Friday this week. It's going to be a lunch hour meetup, and I will link to my Patreon in the pinned comment below. All right, everyone, before I go, in terms of full disclosure, I am long SCHD. I own that ETF in my personal dividend stock portfolio. Also, I am long some of the holdings in SCHD's top 10. I am long Home Depot, ticker HD. I am long Chevron, ticker CVX. I am long Pfizer, ticker PFE. I'm long AbbVie, ticker ABBV. I own those stocks in my personal dividend stock portfolio. Also, in terms of a friendly disclaimer, today's video, it's not investment advice. I'm not a licensed investment advisor. I'm just sharing my journey here on YouTube for fun and entertainment. Before you go out and invest in the stock market or anywhere else, please consult your licensed financial advisor first. It's possible to lose money in the stock market. Thank you for watching, and I will see you in the next dividend stock investing video.